Welcome. In this video is Xcn Downtrend over. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart shows that price movements have been trending upwards in recent periods, and that this movement has formed a certain systematic structure. In particular, the fact that certain lows and highs have formed at successively higher levels suggests that buying pressure in the market is increasing day by day, and that this situation signals the beginning of an uptrend. In terms of technical analysis, such formations generate strong signals that investors are buying with increasing confidence, that market psychology is shifting in a positive direction, and that the price is starting to move in an upward channel. In technical terms, this newly formed uptrend provides an important reference point for both short-term and medium-term buyers. This is because each new higher high followed by a higher low provides fundamental clues that sellers are losing their influence in the market and buyers are becoming dominant. If this pattern persists, the rising trend line also acts as a dynamic support line. As long as the price stays above this line, expectations are maintained that the upward movement will continue. Trend lines are very important tools in technical analysis. They allow traders to better identify price direction, momentum, and possible reversal points. In particular, an emerging uptrend line may not yet be fully recognized across the market. This creates significant opportunities for early traders. As the price moves along this trend line, each pullback can also be considered a buying opportunity. When the current technical structure is evaluated, it is observed that the price is approaching this rising trend line step by step and giving upward reactions by touching this line. This shows that the trend has not yet been broken, and market participants accept this area as a support level. If this trend is maintained, it is technically quite possible that the price will test higher levels in the coming days. However, for this structure to remain valid, several important conditions must be met. First of all, the price should not break this ascending line to the downside, meaning that it should not lose its support line. Because this line is not only a visual curve, but also an indicator of the level of demand in the market. If the price dips below this line, this can be taken as a warning that the buying power in the market is weakening and the uptrend is under threat. On the other hand, short-term corrections that may occur from time to time within this rising structure should be considered natural. No trend moves in a linear fashion. Therefore, the price may experience occasional pullbacks, but the important thing is that these pullbacks remain above the rising trend line. If this is maintained, the trend is technically valid. This allows the uptrend to gain momentum with the formation of higher highs and shallower lows. Another aspect that traders should pay attention to in such uptrends is volume analysis. If there is an increase in volumes while the price is in a rising structure, this is a strong indication that the rise is healthier and more sustainable. If the price bounces up with increasing volume, especially at the lows, it indicates that the buying power remains fresh and the market is still buying. Another element that should be carefully monitored within this structure is the psychological resistance levels. As the price moves in an uptrend, it may encounter certain horizontal resistances from time to time. At this point, the price needs to break through these resistances with volume. If these resistances are broken, new waves of buying will start and the price will head towards higher targets. However, at this stage, the rising trend line remains a zone of confidence for investors, because this line is the area where the first reaction is expected in case the price falls. But we can't decide the analysis only with trends. Let's look at other metrics. Keep watching. A detailed technical analysis of the chart reveals that the price has recently formed a classic pattern structure that has attracted a lot of attention. This pattern is the bull and handle pattern, which is widely followed by traders, and is considered to be a harbinger of sharp upward movements, especially after long periods of horizontal and calm periods. When the current price movements are analyzed, it is clearly observed that the first and most important part of the pattern, the large and round structure, the cup part, has been successfully formed, and now the price is starting to form the second part, the handle part. Such patterns develop in accordance with the psychological cycles of the market. The bull part usually represents a rebound after a prolonged downtrend. The price first experiences a deep decline, then recovers from it, and gradually climbs back to its previous levels. During this process, the price moves in a wide U, which forms the bull part of the pattern. In this part, volume usually falls and the price tends to consolidate. However, as we move to the right side of the bull, buyers become active again and trading volume starts to increase. This is a sign that market players are expecting a positive trend again. The second phase of the pattern, the handle, is formed in a shorter period of time and with a shallower retracement. At the moment, this pattern is clearly developing on the chart. The handle is usually a correction, when traders take profit realizations and look for new buying opportunities. This correction may take the form of a falling channel or a pennant structure, and usually does not involve major selling pressure. The important thing is that after completing this short-term correction, the price regains upward momentum and makes a move towards the resistance zone that coincides with the upper edge of the dish. This resistance zone is also considered to be the neckline of the dish handle pattern. Once the price reaches this level and manages to break it upwards on high volume, the pattern is technically confirmed. According to the rules of technical analysis, from this point on, the price target is determined by the upward projection of the distance between the bottom of the dish and the neckline. In other words, the target level of the pattern is calculated as an upward movement equal to the depth of the bowl. Volume analysis is also extremely important at this point. A drop in volume along the handle zone is healthy because it indicates a temporary flattening of the market. However, as the price approaches the neckline, volume should start to increase and rise significantly at the breakout. Breaks that are not supported by volume are often unreliable and can result in what we call false breakouts. For this reason, price action should be monitored with volume and confirm whether the breakout of this pattern is gaining strength with volume support. If the pattern works, especially if it occurs on longer-term charts, very satisfactory price targets can be set. Therefore, the bull and handle pattern can play a strategic role in both short-term trading and medium to long-term investing. Moreover, the completion of the pattern indicates not only price action but also a change in market sentiment. So when the price breaks the upper boundary of the dish and breaks out to the upside, it's not only a technical event but also the crossing of a psychological threshold. This encourages new buyers and the uptrend gains momentum. Another important technical criterion is the time dimension of the pattern. There should be a certain ratio between the duration of the bull and the duration of the handle. Usually, the handle part is completed in a much shorter time than the bull part. If the handle section becomes too long or turns into a deep correction as deep as the depth of the bull, it means that the formation may break down. However, looking at the current structure, it is seen that the handle section develops as a more superficial correction, indicating that the formation has a healthy structure. The MACD, one of the most popular indicators among technical analysis tools that provide strong signals about market momentum and trend direction, has produced an extremely critical signal in the current price structure. In detail, there is an upward crossover between the MACD line and the signal line, indicating that the MACD is gradually rising towards the zero reference level. Currently, both lines are near the 0 point and have a tendency to exceed this level to the upside. This technical outlook suggests that the positive momentum in the market is gaining strength and the price has the potential to move higher. Such upside crossovers are often considered as a graphical reflection of the optimism that is beginning to form among market participants. This is because this type of crossover occurs when the MACD line shows that the short-term moving average is rising faster than the long-term moving average. This indicates that the price is gaining momentum and short-term buyers are starting to dominate the market again. In the current case, this crossover becomes even more meaningful as it not only happened but also occurred in a region close to the zero line. This is because the MACD breaking above the zero line is an important technical event that confirms both the strength and direction of the trend. A MACD signal that starts to rise above the zero line has been observed many times in the past at points where the price gains momentum and strong rally movements begin. This is because the MACD measures how much the price deviates from its average value. This measurement helps us to understand whether the trend is weak or strong. In the current case, when this divergence is to the upside and the lines are pushing the zero level, it serves as a technical warning that a bullish trend is strengthening. With the MACD indicator, not only the crossover is important, but also the appearance of the histogram bars. These bars represent the difference between the MACD line and the signal line, and as this difference widens, the bars start to grow. At the moment, if the histogram bars have started to form around the zero line in green, this can be taken as an additional confirmation that bullish momentum is gaining strength. Upside crossovers, especially those that occur just below the MACD zero line, are common in scenarios where the price is making a reversal from the bottom and often constitute the first phase of a new uptrend. MACD lines need to go up. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.